Well, happy Friday. Welcome to Forex.Today, the YouTube community of almost 20,000 foreign exchange traders. We gather here today to conduct technical and fundamental analysis. Let me remind you that trading is risky, not appropriate for everyone. Your past performance, good or bad, is not necessarily indicative of future results. Please stay small, stay humble, focus on the long term, never risk money you cannot afford to lose. My name is Wayne. Nice to meet you. I like trading currencies. Before this, I was a venture capitalist. Before that, I was a high-tech entrepreneur. Before that, I ran a nonprofit organization. And before that, I worked at NASA. And before that, I had a paper route. So that's me. I look at Forex as a small business. And the success of a small business always relies on its planning. So we look at price, we look at time, and then we also look at the rationale for the flow of capital around the world. Cool. So let me know how I can help. In the description below today's video, there's a link to my book. There's a link to fxbootcamp.com, which has 65 hours of foreign exchange trading videos for $88. Not bad, bro. Day trading, swing trading, price action, all the technical analysis in the world that you possibly need. Trader psychology, there's a lot there, dude, 65 hours. There's also a link to tradersway.com, a trustworthy, ethical foreign exchange broker that has narrow spreads, huge swaps, fast execution speed. What more do you need? Above average, good-looking employees? Yeah, we'll go check them out. Tradersway.com, open up a demo account, take you just a few seconds. Then you'll be in the back office. Everything's clean and organized. You can download MT4 or MT5, C-Trader if you want. And yo, you're in business just like that. Let them earn your loyalty and respect like they earn mine. I think you'll be very pleasantly surprised. So here it is, Friday, getting ready for next week. One of the things we talked about in the swing trading group was setting up next week and the rest of the month. And we talked about many things that might shape that bias of yours. Things like the known unknowns and the unknown unknowns. One of the things I focused on personally was selling the pound. And unfortunately, I've hit some of my targets already. And you're like, what do you mean, unfortunately? Well, that means I got to create new plans for next week because I'm out of some of those trades with money in the bank. So anyways. So anywho, we got to figure that out. But anyways, let's just see what's going on. Nothing's right, I'm torn. Euro dollar. Here was the previous trade plan of here's the overreaction to the ECB news. Here's the pullback that I expected, and it should produce some down. Well, it did produce some down. We got this low. So the next one would be something like this, and the one after that would be like that. Okay, so far so good. I mean, look, this is pretty close, right? I did the plan when we were up here. Okay, and the next one will be there, and the next one will be there, and then those will be out. You can trade them many ways. Just jam your stop at break even and hope you survive. Or you can add a second one, add a third one, and then take profit on all three down there. Nothing's right on tune. So euro, let's just, I guess I'll leave that there for now. Let me redo this. This is all from the ECB meeting. Yen suddenly strong, dollar kind of in between, Swissy doing quite well. Aussie doing great, pound weak. CAD doing great, Kiwi doing great. So one of the things that I'd put together was sell the pound versus Aussie, sell the pound versus CAD, sell the pound versus Swissy, sell the pound versus Kiwi, And some of those have already hit targets, swing trade targets. So it was a pretty big overnight. Okay, like for example, okay, this, look at this, just from last night, all the way down and even hit monthly target. $91. This one's still, how many do I still have open? Pound Aussie is still open. Pound CAD is still open. Euro Aussie, same type of trade, is still open. But everything else is out. And you can see like in account history here. Pound Kiwi, Pound Swissy came out last night. And then there's another Pound Kiwi break even, and then a little plus. So like Pound Kiwi, Pound Swissy, Euro Kiwi, okay? Pound Kiwi, Pound CAD, Pound Aussie, Pound Kiwi. You starting to see like sort of the trend there? You should be able to read my trading and see a story. What's up, Giveness? Right? Does that make sense? Like they're all doing the same thing for the same reason. So the consistency there shows the logic of the strategy. Now this one's stuck at break even, and I'm hoping it can go a little bit farther. Denise says, yeah, it makes sense. And that's what we set up yesterday, wasn't it, Denise? Like Pound CAD, you could take a look, try to figure out what this is on an hourly chart. And I think the logic is pretty clear. Look at this on the day trade. Short, look at the target. So the next part of it is, hopefully, right? Or I've missed it. Meaning that'll be it for now, and that's not the actual target. So you got to do something like that. So the other one hit the aggressive daily, which was also the aggressive conservative weekly, which was also the conservative monthly. So, you know, I take profit because aggressive daily, conservative weekly, conservative monthly, you know, like all that adds up to, you might, you know, hey man, lock it in. You know what I'm talking about? What else is here? You can also see the average loss, -20, right? $20, $7, $6, $1. These are all break evens. And then average winners, 70, 20, 30, 40, 250, you know, almost 100. So there's a nice risk return, so to speak. Frankie says, trade of the week, Pound Aussie. Could be. So like that's one I'm still on, right? And so let me zoom in so we can take a look, and then we can adjust the logic. Can you figure out what I did here? Down, 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 down. Let's do this maybe with arrows, and I'll make it a little fatter. Okay, down, 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 up, up, sell. Down, 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 down. So how do we analyze this? And I'd say, well, here's a day trade, and here's the day trade target. Bearish profit zone aggressive. It's just a day trade. So I could take the profit. But to be frank, since Frank is the one talking, to be frank, it's really a swing trade. But I might be able to take the profit and come back on Sunday and try again. Yeah. And I would agree with that. Frank's like, hey, people want to take it down. But that's a Monday trade. So if I was a little bit, I could have taken profit 90 minutes ago and then just regroup on Sunday and see if I get a try again kind of thing. Frank took that trade. Yeah, it's a standard swing trade. Or, I mean, day trade. Okay? Like the day before, this is a standard. There, look at the target. I mean, look at the bottom was the exact target that we had. Look at this. In the last hour of the day, we hit precisely the target of the day. Okay? And then it went up for 1, 2, 3, 4, 5, 6, 7, 8 hours. London opened, and we are exactly, look at that, exactly on the daily sell. And then we bottomed out currently exactly on the daily take profit. There's no coincidence here. Okay? It's amazing, isn't it? Okay. It's amazing, isn't it? Like, you know, you can just keep going back and looking at these great examples. Look at that. Just redonkulous. The top of the day is precisely the M3. And check this out. The bottom of the day is precisely the day trade target. Day trade entry, day trade target. The next, right? This day, oh, it didn't work as good. But this day worked out good, and this worked out good. So it's not every time. But it's still, you should know the technique because clearly other people are using the same strategy, right? Okay. What else? Take a look at the Euro trades. Euro, you guys still like Euro? Euro Kiwi. One of the things we looked at last night in the swing trading group was the difference in 10-year bond yields through all the major, what was it, G8? It wasn't G10, it was G8. We looked at the differentials and lined things up. And you would think, looking at the differentials like Euro Kiwi down, for example. Have I ever told you you're my Euro? Here's pound CAD. Once again, I missed it. Son of a... See, look at, I'm telling you, too conservative. Sometimes I'm too conservative. So there's a top, lower low. Okay, try to catch. Really, it was after that I expected up, kick it off of here, kick it off of here, baby pop, right? So I expected some up and then roll it over. And I was only partially right. It came up 382 instead of 618. and missed it. Gold, dang it. And of course, we did this when we were way down here. So I was short at 32. It popped, took me out for a loss, came down, came up, tried to catch it again and missed it. And it's just one of those things. Nothing's right, I'm told. So let me kill that. Too bad, so sad, huh? Where's my stop on this one? Way up there. All right, I'm going to move my stop to break even. Actually, you know what? God dang it. I could take some profit there, couldn't I? Hang on, Pop. Papa's got to work here. Uh-oh. You know what? I'm going to lock in 100 pips. What the hell? It's Friday, right? Worst case scenario, 100 pips. I think it should drop further, but I can always catch it next week, right? Yeah, Mister's right, like I think you should. Well, I did. Hey, boom. There you go, Mr. Right. Knuckles. Got the triple on it. As they say, the first 100 pips are the hardest. Yeah, thank you, man. All right. Bradley says, what about Euro Pound? I'm not interested at all. I don't want to look at it. I don't want to smell it. I don't want it to look at me. I don't want it to smell me. I don't want to know anything about it. Why is that, Bradley? I don't want to see it, hear it, smell it. I don't want to touch it. I don't want someone else talking about it. How come? These are the 10-year bond yields we were talking about last night. Oh. Bradley, what's up? Oh, it's stinky? Okay, well, give me a real answer. Why would I not want to even look at the chart? Abdullah, it's a bot that's plaguing YouTube. I was on a music channel while I was working, and their chat was getting the same bot. So there's just millions of bots. So I think YouTube has the same problem as Twitter, where maybe half the users are bots. Think of it, there's millions, right? Because every time you block them, that account cannot post anymore. But then they just post again and again and again. And they have millions and millions of probably Gmail accounts. And each Gmail account has a YouTube account. And then they just post. Amazing, huh? Okay. All right. So anyways, is Bradley gonna answer or what? Guess not. Well, they're both fundamentally weak, as Jim says. Okay. So to say it differently, I'm a seller of the pound and I'm the seller of the euro. So I would not be interested in either of them. Just not even interested. Who cares? Oh, but you might say, oh, but look at the pound. But yeah, I honestly don't care. So one of the things we talked about last night in the swing trading group, we talked about a lot of things, but you got to think, you got to know. Yeah. You got to think about what you're buying and what you're selling as real assets. Do you want to own the euro? Do you want to own the pound? Would you buy that as an asset? You're like, well, the fundamentals are not good and the risks are really high. No, then the answer is no. I don't want to own them. I don't care if it's going up. I don't care if it's going down. I don't want to own either asset. So it's all irrelevant to me. Irrelevant. Okay. Richard says pound is changing. Cool. Cool. Then you would look at that. So this is what Richard is saying. Let's go back to this. Okay, currently the UK 10-year bond is paying, almost 2.5%. And I think what Richard is saying is this is on its way probably closer to 3%. We're not talking about the Bank of England rate. We're talking about the yield on the 10-year bond. So as high as 3, which is pretty on par to the United States, but Eurozone significantly less. Okay? And so what I also see here is you want to borrow money from Japan and from Switzerland because it's the cheapest. And you want to lend it to the United States, Australia, or Canada. Okay, New Zealand, look at that, 4%. So the UK is catching up. But I want you to think about this, Richard, as well, because you are correct. You are correct. That is an interesting observation. But the other thing you should put in is not just the income, but is the income high enough to offset any particular risk? So if, for example, Putin shuts down natural gas to Western Europe, would that significantly impact the Australian economy and that currency? No. Would it significantly impact the Canadian currency in a negative way? No, it'd probably actually help it. What about New Zealand? Is it isolated from that geopolitical risk? Yeah, probably. But what about the UK and the Eurozone? You might own an asset paying you 3 to 3.5%. Let's say in this case 3%, right? But you're going to get crushed by a collapse in the currency. Most likely the UK and the Eurozone, their currencies would be negatively impacted. You will still earn your income, but the income you earn will be worth less in your local currency, so let's say dollar, because the currency you're being paid in has gone down in value, and that's an additional risk. So if I said to you, you're saying, okay, well, pound, they're going to raise interest rates, so that's going to be good for the UK. I'm like, well, I bet you face more risk than New Zealand, and New Zealand already pays you more. So it's not enough. Raising by 50 basis points is not enough to compensate you for your risk. You see? And we're not even talking about inflation. So you would look at things like inflation in these economies. You would look at growth, nominal and real growth. You would look at employment. You'd look at a bunch of different things. This would be one aspect. But yes, the UK is paying more than Euro. So maybe you want to own pound more than you want to earn euro, and that's likely to go up significantly. Great. But is it enough to compensate you for levels of inflation? Does it compensate you enough for levels of potential risk? And the answer is, well, there's still better opportunities. And that is fundamental analysis. You see that? I want you to think about that. Are there better opportunities? It's not absolute. It's relative. So you're like, you're better off lending the money to New Zealand. Even if they were the same, even if the United Kingdom raised interest rates so high that the yield on their 10-year bond went to 4%, equivalent to the New Zealand bond, but you face less risk and probably less inflation, so you're better off going with New Zealand. And therefore the UK still is relatively weak. Isn't that cool? That's what fundamental analysis is. Remember, an amateur thinks fundamental analysis is news. News is not fundamental analysis. News is news. Okay? That's how, a hedge fund might potentially make a decision. Okay? Cool. Nice! Isn't that lovely? Are you going to click the like button or what? Yeah. Cool, Richard. Coolio. So we got this one, Oscar Mike, which is nice. So Euro's still coming down. Euro Kiwi. But cool, man. Some good trades. What a great Friday. I get to party early. Take a look at commodities. We're getting hung up here. I took a little shot today and then got knocked out of break even. Just got too busy. And I guess I'm okay with it too because, being a trend trader, I need it to trend. So even on a 5-minute chart here, if you were going to sell it, for example, and I did sell it, you would expect something like this at the open. So if it instead does this, I don't want to be in it. I want out. So I jam my stop somewhere, probably in here. I don't know. I can't remember now. Well, these are only 5-minute charts, right? I don't recall. Anyway, so I'm glad to be out because I'd want to be up by $1 by now. Let's look at our friend crypto. Here's the trade plan from last night. We were here. Okay, I had identified the roll reversal, the moving average, and up, down. Great. And so far, no follow through, but the plan would be to let it run. I would jam my stop. So maybe your stop's here. And you should be able to ride the 5 from here. And that's risk on. That means the stock market's going to go up today. Ooh la la. Richard says, can you short CAD as you think oil can go down? You can think about it that way, but it is too simple. So they are related, but they are different assets. And I am bullish on the Canadian dollar, and I'm bullish on oil, but I don't have to be bullish today. Okay. Dude, Wavy says, I've been trading for 2 years unprofitably. Yeah, that happens. I traded on a demo account for 2 years. So all I can say is come to these webinars every day for free. I highly recommend you pay the $88 and join FX Bootcamp. If you don't have $88, honestly, I can't help you. You got bigger problems. But I can tell you the $88 is ridiculously, stupidly cheap. It's just stupid that I charge $88. So take advantage of my stupidity and get yourself up to speed. But if you say like, oh, in my country, $88 is a lot, I can't help you, man. I can't take you out of your country. I can't take you out of your neighborhood. I can't change your situation. But that's a dumb price. It's so cheap. So if you do that, I think you will be able to make some significant changes in your trading behavior. But again, I don't know you. I don't know your trading style, your behavior. I don't know who taught you to trade. I don't know if you're trying to figure it out. It's already been figured out. So anyways. Yeah, Richard's like, yeah, halfway. You're not far off, honestly. Yeah. Anyways, anywho, I think he heard me. Abdullah, after taking my course, how long will it take you to make 4% a month? You will never do it. I don't want you to sign up because you think if you add money here, now you'll be an expert. I have no idea. Okay, you're asking me like, if you join a boxing gym and hire a coach, how long until you can fight with Tyson? Dude, probably never. Think of it. 5% of foreign exchange, retail foreign exchange traders are profitable. Are you in the top 5%? Once again, I don't know. I don't know you. I don't know your brain capacity. I don't know your work ethic. I don't know your worldly point of view. I don't know how much time you can dedicate. I don't know if you got 5 jobs and 7 kids and 3 wives and 15 dogs and a bird. I mean, I don't know you or your ability. I know the training is good. But if you're like, if I pay the $88, will I become successful? No. Okay? No, don't do it. Don't pay the $88. Okay? You have to be able to do the work. You know, and I was thinking about it because a lot of people ask me about my Ivy League degree, especially since I got it late in life. Is it worth it? Does it make you successful? And I think about it because I knew almost everything. I already knew almost everything that I was taught at Harvard, just through life experience and stuff. Doesn't make me smart or a genius or something. It was just, look, honestly, I knew a lot of it. Now, there are a lot of things I didn't know and I learned, but would it change my life radically enough to say, does Harvard make you a success? And I think, honestly, the answer is indirectly. Now, if you think about the type of people that get into that institution and then go through the unbelievable amount of work and come out with an A, top, nobody gets C's at Harvard, honestly. So everyone works for themselves. So like, I realized it's the type of person that does it. If you have that kind of like political strategy to get in, to test well, the fortitude to play the game logically, strategically, politically, and then get your butt into that institution, and then the hustle and the drive and the fortitude, and you can take the pain and push through, and come hell high or high water, you get the job done, and you get the job done right, and you get the job done right well. The only thing Harvard does is prove that you're that kind of person. And so really it comes back to like Abdullah, I don't know you, nor do I think you need a Harvard degree, but you need the work ethic and the drive and the fortitude of that kind of person. Okay? Okay? No, I'm not saying that, Ashish, but what I'm saying is you will need that kind of drive. You don't need that degree. You need that kind of drive. Okay? That's it. So for me, that is sort of like a way to pass the vetting process in certain situations. When somebody is deciding, should they hire you? It may not actually be a requirement, but they might say, oh my God, this guy's got a couple of degrees from Harvard, graduating with honors. This guy's a tough son of a bitch, and he's going to follow through on what he says, and the work's going to get done right. We like this guy. Put him on the short list. And then they go through the other 1,000 people. But I will get shortlisted. So does it matter? Indirectly, it matters. But the thing is, it's one level of proof. Now, Abdullah goes back, right, like, is the education worth the $88? Totally. There's no doubt. It's indisputable. But will it make you a success? Not necessarily. And in fact, probably not. Statistically, if we're talking about probabilities, if 95% of retail traders fail, and you're like, if I pay the $88, which is not even a half of a textbook, like it's not even a book. Right? Like, dude. All right. Here's one basic textbook from one economics class. One. Okay? So I would say here, I could argue, why don't you just get an economics book and teach yourself, well, wait, that's only one topic in the course. But why don't you not take the course? And instead, why don't you just buy this book and teach yourself? And you will learn economics. The problem is, this is probably $350 and it's one book. This class probably had 2 books. And I took 50 classes, right? Like, oh my God. So I would say take this book, but it's like $350. Paying the $88 and getting all the topics is cheaper because this only teaches you economics. It doesn't teach you trading. It doesn't teach you price action. It doesn't teach you swing trading. It doesn't teach you day trading. It doesn't teach you trader psychology. So like, I can't think of a better way of learning all these subjects. You can teach yourself, but it's more expensive. Okay? I probably have, I'd have to guess, I probably have $3,000 in textbooks just laying in my closet. And that doesn't count the class. That doesn't count me moving to Cambridge, right? So anyways, right? Like, yeah. But I'm not going to convince you I'm not going to tell you to sign up. Hell no. Okay. The cost of success is significantly higher. I work on my vacations. That's the cost. You know that? My children, their whole entire lives, sees daddy with his laptop on vacation. Before we go into Disney, Daddy is trading on his laptop. Do you understand that? Their whole entire life, not one vacation, every single vacation. It's just normal to them. Dad brings his laptop. Dad brings a couple of extra screens because trading on one screen is not good enough. And he's got to do it super early in the morning. Daddy gets up hours before everybody else, tiptoes out of the room and into the other room or out to the conference room or something. And then he comes back and then we go. That's what I'm talking about. That's what I'm talking about. That attitude, that drive, that focus, that sacrifice, that pain, that cost. Are you willing to rent a room for $300 so you can have an hour to focus on your trading while you're on vacation? Would you spend the money? You got to do whatever it takes. And that's what I'm talking about. Other people just go away on vacation. What do you mean? I don't understand that. Okay. Anywho. Enough of that. It's important, though. I mean, when we're talking about the psychology of what we do, I'm telling you, it's important. And I never had a mentor. I never had a mentor. I never met a Forex trader. And so in the beginning, I really needed, there was a moment in time when I really needed a mentor. I really needed somebody. I was going through a tough period. I had already quit my job. I was a full-time trader. And then I hit a rough patch. And I didn't know what to do. I didn't know what I was doing right. I didn't know what I was doing wrong. It was a moment when you're looking in the abyss going, oh my God, I might have made a serious mistake. And so I realized I need a mentor. I wish I had a fellow trader that could just put his arm around me and say, hey, well, I've been through this before. Let me tell you how to get out of this mess and right the ship. But I'm like, I don't know another Forex trader. Never seen one, never met one, don't even know where to go. So I wrote down, I thought about it. And I said, well, I got to pick myself up. So I thought about it and I wrote down this big long list of characteristics that I thought a successful Forex trader would have. The gray-haired dude sitting at the top of a bank, smoking his cigars and laughing at all the poor people in the world. But, okay, what kind of characteristics, if that person was successful, what is, and like, I just didn't bullet point it. I thought about it, because I'm a meditator, right? I meditate. So I did a deep thought. What would a day in the life of this person be like? How do they live their lives? When do they wake up? When do they go to this? When do they go to sleep? When do they do this? When do they do that? And I started really thinking about this person, and I created the person in my mind. Okay? Okay. Wayne, can you trade with us on a demo account? Show us. Look, I do it every day, dude. So we can look at it now. There's the answer. I went through every single one of these trades. In this stream, in the swing trading, in the day trading, every one of these trades was pre-designed, pre-talked about. It's all done. You just have to do it. So what do you see here? Little winners, little losers, bigger winners. But consistency in the trading. right? Again, pound Aussie, WTI, Kiwi yen, WTI, pound CAD, Euro Aussie, pound Kiwi, CAD yen, Euro Kiwi, pound Swissy, pound Kiwi, WTI, Euro CAD. And you notice that they're all doing the same thing. I bought the yens, I'm selling the euro, I'm selling the pound. Sometimes I'm buying WTI, sometimes I'm selling it. Okay, so today I lost $1, but a few days ago I made $71 trading oil. Pissy little trades. But dude, it's right. This is just my coaching account. That's it. I coached these trades. But what I don't do is pull the trigger, because I've gone through all of that. I don't do it in front. I use limit orders, for example, because back in the day, I very quickly realized people just copied what I did. So I'm like, well, for example, I like it coming back to this 5 EMA. So, and then I go click, and then everyone just goes click. And all of a sudden I'm a signal service. Okay. So if I'm going to make decisions for you, you need to pay me a minimum of what, $250,000 a year? A minimum. A minimum. If I'm going to do all the research, make all the decisions, pull the trigger, take the risk, you need to, at minimum, pay me $250,000 a year. And I'll do it. Minimum. Because that's not enough to live on. But it's a small account. Cool. Email me, wayne@fxbootcamp.com. So for that, you're going to need, what, 5 million? Cool. But other than that, I will just teach you because it's rewarding for me to stay interested, to stay focused, to stay razor sharp. Because as I'm coaching you, I coach myself. Imagine that I've been doing this every day for 20 years. It keeps me sharp. Okay? I love it, by the way. I love it. I love working with you. I do. It's good. We do good things. All right, so dollar collapsing here. Dollar collapsing hard. Remember, it was Sunday. I said I was worried about a collapse in the dollar and that I was not going to trade dollar this week. Thank you, guys. Can anybody confirm that on Sunday night I said I was not going to trade US dollar this week, even though I'm a dollar bull? Then I'm going to walk away from it and instead focus on the yens. Not on Monday, on Sunday. Truth. Cool. So that's the difference between trading your bias and trading reality. Cool. So anyways, it's weak right now, so we'll let that run. Henry says PMI came out at 47, which is a contraction. So what's happening is the market is under the belief that the terminal rate for the Fed funds is too high, and that the Fed has already created a recession, that we're already in a recession, and that they don't need to raise to the level of the terminal rate that we thought a month ago, a week ago, and even a day ago. And we're shifting to the left. Now, every single person in the swing trading group knows exactly what I'm talking about, because I spent a half an hour, maybe even a little bit more, going over this exact fundamental discussion and of the terminal rate adjusting over a period of time from a month to a week to a day, and that there's a shift to the left and the dollar would weaken. PMI would suggest all that. I could look at this and tell you that that's what's happening, even though I'm not looking at that. But that's what's happening. And it was one of the things I asked everybody to pay attention to now, certainly now, more than ever. I said, maybe even on a daily basis, you should log in and do the analysis that I just taught everyone to do. I said it's so important, it could be the basis of your trading strategy. Okay? Cool. And because of that shift, I stopped buying dollar. And I'm a dollar bull. Now, I could be a dollar bear, but it's long run versus short run. All I did was shift over to the yen. And yen is strong at the moment. And therefore, what am I up to today? Apparently, I'm just taking profit. More and more trades coming out. Another break-even trade. Cool. So I'm just slowly bailing out. And I'll regroup on Sunday night. Cool. Frank is talking about dollar weakness because of technicals on the index. The thing is, what I'm discussing is the why. Okay? Not that it's technical, because very often your technicals are lagging. So I want you to understand what the market is doing, what the market is thinking. Okay? Yeah, Andrew, we do that through moving averages. It ends up being the same thing. I do cover fractals. Not fractals, but I call it fractal geometry because I taught myself, remember? So there wasn't information on fractals. It's not like one day I said, you know what, I need to Google fractals. So I did a presentation probably around 2006 on chaos theory and fractal geometry. And the idea of fractal geometry is, imagine a picture, and a picture is made up of pixels. Okay? And if you remember the original Blade Runner, you could zoom into every little pixel, and all the information in the picture is inside every individual pixel, so that you could zoom in and then zoom in and then zoom in, and you have perfect resolution no matter how far you zoom in, because every pixel has all the information of the entire picture. So it's not like you have, 12 megapixel resolution. It's perfect resolution. Okay? Holographic, yeah, closer to that, like a DVD and a CD. The difference is not just saving in an optical storage device, but saving multiple layers of information on multiple layers of light. Correct. So in this case, what I'm talking about is you look at on the monthly candle chart, the weekly candle chart, the daily candle chart, the 4 hour, the 1 hour, the 15, the 5, and the 1. And all information is there. Price and time. It's always correct. And so that's where I thought about, well, that's like a fractal. The bigger you zoom out and the more you zoom in, all information is inside that chart and all is correct. So then I thought, well, that's interesting though, because you get different patterns at different time frames, right? Zooming in and zooming out, zooming in, and they're all correct. So someone says, well, which is the best time frame? Well, they're all correct. All of them. That's the price and time right now. And the funny thing is like, here's a 4 hour and there's the price and time. Now at that price, if I go into a 1 minute chart, it's the same time and price. It's always correct. So now it comes to like, well, is this a bullish market or a bearish? Well, that's bearish on this time frame. Okay, looks bearish on that time frame, and might look bullish on this time frame, which is monthly. And you can't see it obviously because of my pivots, but nonetheless. So you have to say, well, in the longest time frame, it's still bullish, but as you drill in, it becomes more and more bearish. So something more current is happening. Well, the Eurozone's going through a crisis. They're going through a geopolitical crisis. They're going through a financial crisis. Bond yields in one country are 20%. Bond yields in another country are 3%. There's something broken here. Okay? So we see that. But would I use Elliott wave and fractals and patterns, and should I throw in some Gartleys and all that? I think it's all useful, and some people would benefit from that. I totally agree. I'm not one of those people. I will not trade because of this thing and that thing, and then this comes together and that comes together. Oh, you have to count the number of waves, and then this is a correction wave of this other wave, and like I don't think like that, and I don't behave like that. As a former entrepreneur and venture capitalist, I break things like that on purpose to find a simpler way. Not that it's wrong, but to me, there's too many steps, too much counting, too many rules. And all of a sudden you're trading rules and you're not trading reality. So I'd rather do the fundamentals and come up with a decision like, I'm bullish. Done. I'm going to buy a dip. Done. Well, what about the angle of the... Not interested. Well, this is a third... this is a C wave of a third... Not interested. Just not interested. But I do know it's helpful for other types of personality, probably more engineering type, right? That kind of stuff. Maybe an accountant. I don't know. Someone that likes all these rules and boxes. I'm not that kind of person. I made a decision. I'm a bull. I'm going to buy a dip. It's not complicated in my mind. Okay? So I don't need anything else. And that's how I got to where I am today. Not that it's perfect or the best or anything like that, but I have enough. Okay? So would I be the person? I mean, I can do a very simple overview of Elliott wave, but to get, again, it's just price action and Fibonacci. It's not that complicated, but I know it can get complicated, and therefore that's probably why I don't like it. I don't want to draw a Gartley pattern, a bat pattern, and that kind of stuff as well. Not interested. Just, again, let me tell you what I've always have done. I decide I'm a bull, and I buy a dip. That's it. I decide I'm a bear. I sell a rip. Buy the dip or sell the rip. Whatever. That's it. Why does it have to be more complicated? Huh? Oh, because only the geniuses on Wall Street make money? That's not true. People with assets under management on Wall Street make money. What you will find is the difference between you and the people that make millions of dollars a year as currency traders. Do you know what the difference is? They manage billions of dollars. You're probably a better trader. You might make thousands of dollars a year. Somebody else makes millions of dollars a year, and you might be the better trader. So I would encourage you at a very young, early trading career to start building a track record of success so that you can raise some AUM, assets under management. And then you can survive on well thought out, decent trades. Your losses are tiny. Your winners are pretty good because you try to let the winners run. And if you can collect carry. And you realize that most of the work is they show up, do half decent trades. You don't need any big winners. You don't have to gamble. You don't have to bet big. You just simply show up every day and do a half decent job and spend most of your time keeping out of trouble. And then someone's going to throw money at you because they're risk averse and you're very consistent and low risk. Do you recommend a prop firm? I don't believe there are prop firms. I don't believe any single one of them. I think it's people preying on poor people. I think it's all stupid and a scam. But whatever. You should pay to take the test. Whatever. Remember, there is nobody and no service on this planet that's going to make you rich. There's no person, no service, no nothing. You buy my education, are you going to get rich? No, probably not. Is it going to make you successful? No, probably not. What about this prop firm? Are they going to give you money and you're going to become rich? No, they're not. No, it doesn't even make sense if you think about it. Oh, right? Think about it. How do they make money? It doesn't make any sense. No. What kind of prop firm would take a bunch of amateur retail traders that can't trade worth crap and give them money to trade? It doesn't make any logical sense at all. Well, why don't you just copy somebody for $30 a month? Maybe they'll make you rich. No, they won't. There's nothing. Nowhere, no one you can turn to. You will have to do it yourself. And there's just piranhas swimming all around you. And out on the other side of the piranhas, there's sharks and alligators and crocodiles. Just everyone wants a piece of you while you are trying to find a way to get rich. What you should do instead is isolate yourself from all the piranha and the sharks and the gators. Isolate yourself and do the frickin' work. And it will take you years and sacrifice and pain. I have physical pain right now. But I sleep in a Tempur-Pedic and I can jump in a hot tub. So don't cry for me, Argentina. Blood, sweat, tears for years. It will be relentless. You will be sitting in your seat 20 years from now, exhausted and in pain, but probably the happiest ever. But nobody's going to bail you out. There's no easy way. Develop a track record of conservative trading that shows you're consistent and reliable. People only want reliable returns. They can buy a bond that reliably pays them. They can buy real estate where renters reliably pay them. Okay? You need to be reliable. Okay? Richard says, am I rich, Wayne? Oh, above average, I can tell you that for sure. Okay? So that's where I want you to be at, right? Because if you learn about surviving, like you've been lost in the woods or something like that, there's this, the first few hours are really important. You need a water source very quickly, and then you'll probably need shelter, and eventually you need protein, and you want to start getting rescued. So you need to set up some sort of signal or whatnot, and you get there and you need to be rescued. But then there's a certain amount of time that goes by, and you need to shift your mindset from being rescued to surviving. And it's the difference between dying in the forest alone and getting out alive. And so it's this idea that I don't want you to look for ways to be saved. I don't want you to look for shortcuts. I don't want you to find a guru. I don't want you to find a signal service. I don't want you to find a copy trade. I don't want you to find a prop firm. None of it is real. It's all an illusion. And I want you to stop trying to be saved and move to the next psychological aspect of you need to survive. You need to do this. You need your water. You need your protein. You need your shelter. You got to survive now. And you have to take care of yourself. And when you get into that mindset, everything changes because you're not looking for the easy way. You're not looking for somebody to save you. You are now the one that has to be reliable. You're the one that has to show up every day, every night, every day, every night. Everyone will rely on you. Okay? And now you could provide someone a real service in the future because you can show that you have what it takes and that you have reasonable returns. You more than compensate for the risk. But the most important thing is you're reliable. Okay? That's where I want you to get as soon as possible. You need to break, right? You need to break the old way of thinking and behaving and act differently. Okay? Robert, I think the prop firms are nonsense. I think they're total scams. But whatever. So, hey, have a wonderful weekend. Peace on earth. May the pips be with you. May your profits be above average. If you're in my day trading group, I will see you Sunday night. And I'll see if I can get back into some trades. Hit too many limit orders today. Well, we all got problems. Have a wonderful weekend. Cheers.